Hey everyone, it's Danielle Taylor with Keller Williams Realty here on the beautiful Outer Banks. And I am excited to say I'm filming this on Friday afternoon. So for all of you that are ready to enjoy a great weekend, I wish you the best. I'm a realtor, so weekends don't mean a heck of a lot, but I'm happy because I get to do this every day and show great houses. So anyway, it's that time again. We are ready to talk about our metrics, our shift metrics for our time ending the end of July, so July 31st, 2022. Just a side note reminder that all of this information is courtesy of the Outer Banks Association of Realtors. So let's dive in. So remember, we're handling our four main metrics, the same ones every month. And the first one we start with is days on market. Last month, we started talking a little bit about watching the lead versus the lag metrics and how the lag tells us what's happened and the lead tells us what we think is coming. So let's pay a little bit more attention to that right now. So days on market. So we saw the days on market July over June 2022 jump by 43%. So the days on market for sold single family residential jumped 43% and up 3% from 2021. Okay, so 43% over June and 3% over 2021. So that's a pretty big jump. So we're definitely starting to see the days on market creeping up. That's a lag metric because it's sold. So let's take a look at what's happening with our active inventory. So as of today, all of the active inventory on the market, the average days on market for those actives is 77, okay? Last month it was 66. So we are absolutely seeing those days on market creeping up. That is a 17% increase over last month, okay? So the days on market creeping up for actives, less so in solds, but it's the actives and the under contracts that are our lead metrics. Our under contract inventory. So all of the listings that are currently under contract in single family residential were 40 days on market. Average days on market, 40. That's 29% longer for under contracts, versus solds. Okay, so that's the creep. That's the lead metric that we want to pay attention to. So last month we took away that the lag looked stable, but the lead was trending up. This month, both of these metrics are trending up. So there is no doubt in my mind and no doubt statistically that our days on market are creeping up. Second metric we want to look at is inventory. So while the average residential inventory that we have year to date is down 9% less year to date, it's up 18% July 2022 over July 2021. So that's a pretty big deal. And also, I just want to point out that this July was the highest monthly inventory level that we've seen since December of 2020. Okay, so let that sink in for just a second. We are definitely see the inventory creeping up, 5th consecutive month in a row. Okay, so we now know that our days on market is up and our inventory is creeping up. So that is definitely a lead metric. That is definitely something that is showing us that we're starting to see a shift. We're starting to see some changes in the market. The other thing I like to do to dive into it is to look at new listings. So the interesting thing is that our inventory is up, but our new listing inventory was actually down 24% in July over July. So that's very, very interesting. So our new listings are down and down 16% from June. So our new listing inventory, we're not getting the listings coming on that I kind of had hoped we would in July. I'm really hoping that that changes for August. But right now, what that really tells me is that the listings that are on the market now are just sitting longer. So we're not getting clogged up. We don't have more inventory because a whole bunch of new stuff flooded the market. We have it because the stuff is sitting. So I think that's a really important point. The third thing that we look at is our price adjustments. So what's happening to our price points? So we've been tracking it year to date from 2019 forward. And really what we're still seeing is year-to-date 2022, about 18% of our properties are having a downward, so a price adjustment downward prior to selling. That's still the lowest since 2019, since we started tracking it. But it's getting closer to 2021, which ended the year at 20%. So we're at 18% of the properties now are having a price adjustment before they sell. So, you know, the year to date, we talk about it all the time, can be a bit misleading. So let's look at it month over month. So if we look at, we started in January with 27% of the properties that sold having a price adjustment before they sold. And it sort of has been creeping down. So we got as low as 11% had a price reduction in May before they sold. We crept up to 19% had a price reduction in June. We are up again in July. 23% of the properties that sold in July had a price adjustment downward before they sold. So I think that's a really important metric, and that's telling us that this market is getting back to a price sensitive status, meaning if you are priced appropriately to the condition, and if your price value equation is on point, you are still going to sell quickly and you are still going to sell for the right price. If, however, you do not use your logic and our CMAs and our data points when you're pricing your property, then unfortunately the market will not bear it. You're going to need to do a price reduction before you sell. Okay, so that's what I take away from that. Again, that's a lag because we're talking about sold. So looking at the lead metric, which is when we look at the inventory, what's under contract and what's active right now, what percentage of those are having a price adjustment downwards before they've sold, because they obviously haven't sold yet, they're active and under contract. 35% of our inventory right now that's active and under contract has already undergone a price adjustment. Over a third, okay? So this is becoming a real thing. Now we're not seeing leaps and bounds and huge amounts of price reductions. And I actually think that's a metric that I will dive into a little bit maybe next month. Let's look at how much of a price reduction we're seeing. I think that's gonna be important for us to see what kind of percent on average we're seeing these adjustments happen. So I'm gonna table that for next month. But the last thing that we look at is sale price, the median sale price. So July's median sale price was actually up by 4.6% from June. So we're up to $608,000 was our median single family residential sale price for July. So we're not really seeing the impact on that lag metric right now. But looking at what percentage of properties are selling over ask, because I think this starts to show you where the market is stabilizing. We sort of did this weird curve. So we started January with 23% of the properties that sold selling over ask, and we actually climbed to a peak in May of 40%. So 40% of the properties that sold in May sold over asking price, okay? And that kind of makes sense because we're kind of feeling like March may have been the pinnacle, right? And that would make sense because our March properties that went under contract were probably closing in May. So in June, we dropped to 35% sold over ask, and in July, 28% sold over asking. So we're starting to see that stabilization, that consistency in the market come down. So we'll be watching that too. So, you know, at this point, we're not seeing the indicators yet of a dramatic change on price overall. We are seeing that you have to be on point when you're pricing your property. And when you're buying, the great news is that we now have properties sitting a little bit longer. We may have a much better, more level playing field than we've had in the past, meaning the buyer and seller are gonna have an opportunity to negotiate. So as always, we hope you subscribe to our YouTube channel so you never miss these. Don't forget about our newsletter. It's always in the link below. And we look forward to hearing from you. So if we can answer any specific questions for you or talk to you about any specific neighborhoods or parts of the market, please reach out. We'd love to help. We hope you have a great weekend.